According to KPMG, there's been a nearly 50% slide in fintech investments globally after 2015's global record-setting 46.5 billion rand funding to fintech companies. 2016 saw funding fall off a cliff. It was under $25 billion. That's a bit of a sharp pullback. This is the Moneymakers. I'm Bruce Whitfield, and tonight we discuss the waning investment levels in fintech and also touch on some of the green shoot opportunities. Australia, for example, it reached a record level of investment. $656 million of that global spend went there, and we know that the Western Cape is a hub for fintech activity. I don't think it'll be measured on any graph, however. It is still fairly small in the global sphere. Joining me for a discussion on this, Joelene Pierce, who's a partner in financial services for KPMG in South Africa. Just as I got sick of the word innovation, then came the word fintech to really upset me. The most overused word in financial services. Everybody's doing blimmin' fintech. What encapsulates the universe of fintech, if you like, Julie?
Well, I think, Bruce, that fintech is really trying to use a new technology to make customer services more robust, more engaging, more convenient, and more cost effective.
So fintech could be anything from a call center system that allows human beings to interact with customers better. It could be the stuff that creates the app on
Correct.
This thing to enable my banking or to enable me to check out a share portfolio. Or it could be the stuff that goes into an ATM to make sure that the ATM talks to my bank and tells me insufficient funds and sends me a slip of paper to tell me that fact.
That is correct. And in looking at fintech, financial institutions have realized that there is really so much out there. And what they need to do is really hone in on really what are their game changers with their clients. So what makes their service much better from a client perspective, and then understand, well, what technologies are out there to actually help them with those specific pain points.
Essentially, it's delivering old world service in a new way. That's all fintech is.
That is correct. But in looking at the old world, many of our financial institutions are still stuck with really complexities around their systems, around their culture, around really, are South Africans getting bang for their buck if we're looking at it from a South African perspective? Because I think the financial institutions have had a monopoly, and they've basically pushed out services as they thought were relevant in the market. And this is now sort of changing that on its head.
But that's where the great opportunity lies. Cross-border flows of currency, for example. You've got poor people who might repatriate money to a place like Zimbabwe, for example. They do a job in South Africa, keep some to exist on, send money back for grandparents and perhaps kids who are still in Zim. And that costs a lot of money if you telegraph the money the old-fashioned way. The
Correct.
fintech of 150 years ago. Nowadays, you can send it in packages of ones and zeros, and something like a Bitcoin or the technology underlying Bitcoin makes that possible in an instant for a fraction of the price.
And I suppose what's the game changer with that is really technology. And the fact that as people get more connectivity, they look at digital to make their lives more convenient and to bring down cost of transacting. And that's a major input into financial technologies.
So if the future is fintech, why was investment in 2016 at half the level of what it was in 2015? 2015 close to $50 billion, 25 billion or thereabouts in 2016.
Correct. I think that 2014 and 2015 there was much hype in fintech. 2016, there's been lots of uncertainty, really globally from a macro perspective. So if we look at what has happened with the US presidential elections, or if we've looked at what's happened with Brexit, there's a perceived slowdown in growth in China. From our perspective, investors really took a breath.
Okay.
They became a bit more cautious. They looked for more safe investments to put their money in. And we believe that this was quite a big contributor to really what's happened from especially an M&A and private equity perspective in the fintech arena.
Because there's so many startups. I mean, you have people who work in financial services for 5 or 10 years. They see an opportunity, and it is a pinhead of an opportunity in the haystack of the financial services sector. And they focus in, they narrow in on that, whether it's creating the next SnapScan or whatever it might be, they see that opportunity and they go out into the big bad world and take it. Financial services companies are allowing that to happen because they tend to have a lager mentality.
Yes, that's right. Well, I suppose before, if we looked at fintech, there was a big maybe mistrust between the banks and the fintechs that had established themselves, since the banks looked at the fintechs as disruptors or competitors. Whereas now that's evolved and we're seeing much more collaboration between the banking environment and the fintech environment, simply because the fintechs don't have the scale, they need the distribution channel, and also capital, raising of capital is really tough for them. So the banks provide them with this opportunity, and from the bank's perspective, it's really getting themselves to remain relevant in a more cost-effective, convenient way. And if we could marry the two, I think the banking or the financial services landscape will definitely transform and reach greater heights.
For some bizarre reason, the banks, when I ask them, won't allow me into their computer rooms. They won't allow me into the basement because I believe that everything is held together with bubblegum and sticky tape because they've got legacy systems. Some of these guys, they go back to the 1980s, and rather than tossing out systems, they add new technology on top. And you've got sort of Lego talking to Duplo, talking to wooden blocks from 50 years ago, and somehow these things have all got to fit together. But in that lies the great opportunity, and much of that opportunity seems to be exercised in South Africa.
Yes, exactly. So I don't think you're far off about the banks holding their systems together with band-aids. And with new competitors coming into this environment, so with Discovery Bank, with Time, with Barclays Africa, sort of having the opportunity to sort of transform themselves and make themselves more relevant, it is going to really transform the competitiveness in this banking environment, and therefore putting pressure on this monopoly that the banks have previously had.
I don't know how long your institutional memory is, but 2020, Christo Darvel, ex-dentist, got into technology and created the Bank 2020. He used Sambo's license. He was changing then, that was fintech, 15, 20 years ago almost, when he said banking is necessary, banks are not. How scared should established financial sector players be of fintech? Is Google the next big bank? Is MTN or Vodacom the next big bank? It's entirely possible.
Yeah, no, it's I suppose it's all up for grabs now. I think within a South African context, the banks really have, a reputation amongst, the banking population, and they see the banks as a place where they put their trust. So, and there's a lot of brand loyalty with the banking environment. So I think it will take time for any of the other outsiders to play in this space. But, inevitably, as technology changes, and also as millennials sort of grow in population, and their requirements are much different from the traditional South African who was there 20 years or experienced banking 20 years ago, the environment potentially would change.
And also customer behavior is an interesting thing. It took an awfully long time for customers to accept internet banking as a channel that they could trust to do transactions on. Now, very few people ever bothered to go into a branch, and only if they're really desperate on a Saturday morning to go and stand in the queue. If they have a choice, they can do it all online or through a call center. Now, the app technology that exists on smartphones allows you to do much of that sort of stuff. You don't even need to log on to a traditional old-fashioned computer like this one. We don't know what fintech looks like 5 years from now, is the point.
No, we don't. And I think the point is that the future is emerging at a faster rate than it ever did.
So Moore's law still applies then when it comes to fintech. Moore's law that the power of computing doubles effectively every 18 months. Fintech moves at that sort of rate?
Correct. And I suppose PSD2 in Europe is an example.
And what is PSD2?
So that's a regulation that potentially will be coming in or legislated soon. And this is where a customer can provide a third-party service provider, access to do transactions on their behalf, so on their instruction. So for example, you could use a Google or a Facebook to pay your bills. And with PSD2, the banks need to open their infrastructure to provide these third-party service providers access to clients' customer accounts on their request.
Now, old Bruce sits here and goes cold at the thought, because suddenly you're opening a doorway into my bank account. Security in the space is absolutely pivotal, and that's why banks have been so resistant to fintech. But there's going to come a point where they can't resist it anymore,
Yeah.
and they're going to have to have the protocols and the security in place in order to make it achievable. I suppose that's why apps is messing around, allowing people to bank via Twitter and to bank via Facebook. They're being very progressive in that.
Yes, and as I said, it's all about convenience. So you provide the option to your customer, and your customer selects whether they believe a Facebook integration into their lifestyle actually makes sense for them. And what the regulators are trying to do is create that ecosystem that actually then talks to what customers need, rather than what the financial institutions' strategies are.
So where does spending go from here? We went from fairly low spending to a boom of 2015 of $25 billion to, well, was it 50 billion, down to 25 last year.
Yeah.
Are we seeing just a slump? Do we see a sharp recovery 2017, 18 and beyond?
I think we see a recovery. So with the political environment,
Which
probably
political
settling down.
environment are you talking
I
about?
know.
Are you talking about America? Are you talking about Britain? Are you
Well,
talking about here?
holistically.
Yes.
So looking at Brexit, you know, once we have clearer certainty as to what the plans are in Europe, as well as the States, once we understand what Trump's policies are in terms of regulations.
So you're in no rush then, really. The world is chaotic, but in that chaos comes opportunity, and the fintech players, I think, some of the smartest kids, can I call them kids, young people, younger people in the room, looking for the gaps to exploit.
Yeah, but they need cash.
Yeah.
So I suppose that cash comes from investors, and it's really dependent on where investors are going to choose to place their money. So whether it's more in secure environments, or whether they're going to take the leap into this fintech space, understanding that there's exponential growth that they would get from
Are you
that.
finding those investors quite courageous? Are they willing to push the boundaries, or are they themselves quite conservative? Nobody wants to lose money.
Well, I think 2014 and 2015 are proof of that. That there are investors out there that actually are quite courageous. And I think just really because of what's happened in 2016, there were so many different moving parts. Once those settle, I think investors will look to make money again.
Well, we certainly hope so. Joelene Pierce, thank you very much, because that's what makes it possible for you to eat a box of popcorn, watch the show, and do your banking with your spare hand as you go about your daily business. Fintech is what it's all about. I hate the word because it's pervasive, but it is everything, I suppose. From the abacus was fintech in China 1,000 years ago, and we've been evolving ever since. Joelene Pierce, partner for financial services at KPMG in South Africa, bringing us up to speed with what is happening in the financial technology sector. Till next time on the Moneymakers, thank you so much for watching. Bye-bye.